Hello everyone. Welcome to another video on our income tax series. My name is Gaurav Lohia and I'm a chartered accountant. In today's video, we are going to discuss about two very important topics. One is the charge of income or the basis of charge, section 4 of the Income Tax Act, and then few important definitions of the Income Tax Act. Let's start with section 4 first, right? Section 4, basis of charge. What does this mean? So section 4 is the charging section. It's called the charging section of the Income Tax Act, and it is a very, very important section. It is the backbone of the entire Income Tax Act. If this section fails, if section 4 fails, then the entire act fails. That is, if an income is not chargeable to tax under section 4, then the Income Tax Act cannot charge tax on that, right? It is the ultimate most important section in the Income Tax Act. But what does it say, right? So what does section 4 gives us is it gives us four things, right? The first is the rate. Now, section 4 does not directly give us the rate of income tax. It gives from where we should get the rate of income tax. What it says is that any income, as per the Income Tax Act, any income would be charged through tax as per the rates either defined in the annual income tax, referring back to my previous video where we discussed about the five components of income tax law in India. The rates will be derived from the second component, that is the Annual Finance Act. Any income would be charged to tax at the rates which is defined in the Annual Finance Act, or it could be as per the Income Tax Act itself, that certain rates could also be defined under the Income Tax Act itself, or it could be both, right? So the next is who. What does who mean here? Who means who can be charged to tax, right? So what does section 4 says is that every person, right? Every person, a person defined under section 2 clause 31 of this act means a person. Every person can be charged to tax, right? Every person can be charged to tax. The third is when. So the third component of or the third important aspect of charging section is when can the tax be charged. Tax can be charged on any income. Tax can be charged on any income which is earned during the previous year. Any income which is earned during the previous year. This is very important. In the previous video where we discussed what is previous year, what is assessment year, charging section, that is the section 4, gives that any income which is earned during the previous year, only on that the tax can be charged. It cannot be charged, tax cannot be charged on any income derived during the assessment year. It can be only charged any income derived during the previous year, right? So the fourth and last thing is so the fourth component is how. How can tax be charged? And it very clearly says that tax can be charged only in accordance with the provisions of the Income Tax Act 1961, right? So the tax can be charged only in accordance with the act. Tax cannot be charged from outside the act. Only and only if the act provides for charging tax, only then it can be charged. Only as per all the sections, more than 300 sections which we have in our Income Tax Act, only based on those sections the tax can be charged, right? So this is a very important section in the Income Tax Act. If this fails, if this section fails, then tax cannot be charged on the income, right? Moving on. Next we will look at few important definitions which we have under the Income Tax Act, which should be remembered by everyone, right? So the first one we will take is the assessee. Assessee. What does assessee mean? Well, assessee means any person or every person who owes any tax or is required to pay any tax or any other sum of money under this act, right? So what is an assessee? A assessee is any person who is supposed to pay any tax or is paying any tax or any other sum of money. It could be interest, it could be penalty, or any other sum of money which is payable under this act. That person is called an assessee. Further, it also includes, further, you have to remember this, further it also includes any person on whom any proceedings have been started. What is proceedings? We will look at in this next definition. Any person on whom any proceedings have been started, either for the assessment of his own income. Now, what is assessment? We will look next, we will take up that definition as well. For now, just remember any income on which assessment has been started, or assessment has been started in terms of any income earned by others, right? So what could that be? Say, for example, when it is a minor child. Now, minor child, a minor person cannot be an assessee. It cannot be an assessee in terms of Income Tax Act, right? So that income, the income of the minor, is taxed along with either the parents or the guardian. So there the parent or the guardian becomes an assessee on an assessee to whom the income of another person is being taxed, right? So the third is loss sustained either on own income or on another income. So why this point has been added is a person need not be an assessee only if there is an income. Even if there is a loss, that person can be an assessee, right? And the fourth point is if there is any refund due to any person, then in that case also they will be an they will become an assessee. Say, for example, my income might be lower than the basic exemption limit. However, some TDS has been deducted, so only refund is due to me. Now, I cannot say that since my total income is less than the basic exemption limit, I am not required to file any income tax return, so my income is not taxable, so I'm not an assessee. No, if any refund is due, even then you become an assessee. And further, every person who is deemed to be an assessee under the provisions of the act. So there are certain cases where we will see how a person is deemed to be an assessee, right? And the last point of an assessee of in definition of assessee is a person who is deemed to be in default, right? So let's say somebody was supposed to pay any tax, but they did not pay any tax, so they will become deemed to be in default. Even in that cases, a person would be an assessee, right? Again, so very important thing, who is an assessee? Every person whose income is tax, who owes any tax or any other amount under this act is an assessee. Further, assessee is a person on it can be taxed on his own income, could be taxed on others' income, could be a person on whom there is losses and there is no income. Even then they are assessee. If there is a refund, then also they could be an assessee. If they could be deemed to be an assessee, they could be deemed to be in default as an assessee, right? So next coming on to assessment, very small definition for assessment. Coming to assessment, so assessment in simple terms means the procedure to the procedure to determine the income and tax of an assessee. The procedure to determine the income and tax of an assessee. So in the previous video, we saw that there are 15 steps to calculate the total tax payable or receivable. That is basically what we call as assessment. Now, the assessment can be of two types. One is a normal assessment, wherein the income is assessed for the first time, or there could be a reassessment where an income is being assessed which has already been assessed, right? We will look at these provisions, when we have normal assessment, when do we have reassessment, why reassessment is required in future classes. So for now, just remember what assessment means. So finally, now coming on to the very important definition. So every time we have been in this video, we have been discussing about basis of charge. So on whom it can be charged? Every person. What is an assessment? What is an assessee? Every person or any person. So what is this person? Right? What is this person? So person does not mean a human being here. So in common parlance, we use person to be any natural person or a human being. But for income tax purposes, a person not only means human being, it includes a lot more than that, right? What are those things? First thing, so the first is an individual, right? What does an individual mean? A natural human being like you, me, or any other person is an individual, right? The second thing, second is HUF. What is an HUF? It is called as Hindu undivided family. So this is as per the Hindu law, wherein all the male lineal descendants form part of a single household. So their income or the income earned by that household is taxed together, right? Until about 2005, only the male descendants were part of the HUF. But after that, even the females are part of the HUF, right? Who can form an HUF? Any male person or any female as of today who is married can form a HUF, can form a HUF. Now, uh, the oldest member or the most senior member of an HUF is called as the Karta. Is called as the Karta, and Karta is the whole and soul of the HUF, based on whom the income would be taxed. So mainly Karta is used for determining the residential status of a HUF as well, right? So the next is, the third is company. A company, simply a company in terms of Companies Act of 2013, right? Or any company which is incorporated before that act, that is before 13. Earlier we had Companies Act 1957, either in that act or even before that. Any company incorporated even before that, that also is termed to be a company. Any company which is incorporated before Income Tax Act 1961, that is also a company. A company which is incorporated not only in India, even if it is a foreign company, that is, they might not be registered in India as a company, but they are a foreign company registered in any foreign law. Even then, they are termed as a company, right? Or any kind of body corporate, defined or assumed to be a company under the Income Tax Act, right? So the next is, fourth point is a firm. So what is a firm? In simple terms, firm means partnership. Any kind of partnership, it includes limited liability partnership, LLPs as well. So any kind of partnership would be assessed as a firm, right? So this is all the definition of person what we are talking. Whenever the Income Tax Act uses a person, that means all these are covered, right? We still have more. So the next is AOP or BOI. AOP or BOI. So what is AOP or BOI? AOP or BOI are similar to partnership, but not exactly partnership, right? AOP, now when we say AOP, that means association of persons, that is two or more persons come together like a partnership for a common goal, right? They form for a common purpose. And once the purpose is fulfilled, usually it is dissolved, right? So that is AOP. Now in AOP, association of persons, anybody can be a partner to it, right? Say for example, an individual, a partnership firm, a company, all three can come together and form a AOP. Whereas on the other hand, BOI, body of individuals is different. There they might not be a common goal to achieve. It might not be for profit per se, but it could be something else from where uh, a few individuals are deriving profit, right? A single source of income where multiple people are partners and they are deriving profit, not or deriving any sum of money. So that becomes a body of individual. Usually in body of individuals, the share of individual person is not determinable. You cannot divide it amongst the individuals, or there is no determined way of dividing that profit or the income, let's say, right? So the next one is local authority. So the next one is local authority. What is local authority? In simple terms, local authority means any of your municipal corporation or a panchayat or any local body that is a local authority, right? That is also for income tax purposes, that is also a person. So lastly, we have uh, the seventh point, artificial judicial person. Lastly, we have artificial judicial person. What does this mean? Artificial judicial person, also referred to as AJP. So, artificial judicial person, what it means is that any person or any wouldn't say individual as such, any entity which is not incorporated, need not be incorporated, is not a natural person, does not fall under any of these. But for the purposes of law, we have to give a distinct identity to that person, right? That is called as a artificial judicial person. To give you an example, if you look at the case of Ram Janmabhoomi, right? So there, the one of the parties to the case was Ramlala. So Ramlala, being a deity, they themselves cannot come and represent, right? However, they were still a party to the they were party to the case. So in these kind of cases, the Ramlala, the deity, becomes an artificial judicial person, right? So to understand simply artificial judicial person, you can take it to be any kind of a deity or a person who themselves cannot come and represent, right? Who do not actually exist in reality or in person. However, their existence is applied. Right? So this is the definition of person. There are certain exceptions. Uh, So one of the exceptions to the definition of person is that in cases of AOP or BOI, the motive need not be profit. They might be incorporated, they might not be incorporated. Registration or uh, incorporation is not something which is assumed to be there or which is a requirement for someone to be called, someone to be falling under the definition of person. Even if two persons come together, orally agree to do a business, they would still form under partnership and become a person under the Income Tax Act. Incorporation or registration is not mandatory. Second, The profit motive need not be there. So motive here does not decide if a person is going, if any individual or any entity is going to be a person or not. Let's say we start a trust together, right? The motive of the trust is not to earn income, but to provide services to the poor, or provide food to the needy or the poor, or educate someone. Now here the motive of the trust is to provide services but not to earn profit. But during the provision of these services, I might still earn profit on which I will be charged tax, right? So the motive is not important here. So these are certain exceptions which have been added to the definition of person. Now, there are many definitions in the Income Tax Act. However, there is a general rule for the definitions which has to be followed. What is the general rule is, if a definition has been provided under the Income Tax Act, then you have to look at that definition itself. Say for example, person. Now in common parlance, a person might mean a human being. However, income tax gives a more wider definition of a person, right? So we have to look at a person as per the Income Tax Act whenever discussing about the income taxes. If something is not defined under the Income Tax Act, then what do we do? What we do is, in that cases, we look at another act called as the General Clauses Act. We look at another act called General Clauses Act. In General Clauses Act, there are several definitions which are listed out, which can be referred to. If it is not there in the General Clauses Act as well, then we look at the dictionaries, right? We can go back, check the dictionary, or what a term is usually meant in common parley. That can also be taken into consideration for deciding the definition or a meaning of a particular word, right? Now, lastly for this video, a very small concept, that is the types of definitions we get. So whenever you look at any definition of any word in any act, there are mainly two types of definitions. One is called the inclusive definition. One is called the exclusive definition, right? What do they mean? Inclusive definition means that, for example, a person. Now the definition of person is an inclusive definition. What does that mean is that person includes all of this. Person includes all of these and much more. If anything which resembles this, that also would become a person, even if it is not particularly defined in the section, right? So say when you say an individual is everyone, be it male, female, if any other kind of a natural human being would fall under individual, even if not specifically defined, right? Even if a word is specifically not included in the definition of person, this being an inclusive definition, that would also be covered under also covered under the definition of person. For example, let's say there is a new Companies Act which comes in today, right? And a new type of company has been has been introduced. Or let's say even the new Companies Act is not actually included in the definition itself, but that would still form part of this definition because this is an inclusive definition. It says a company and everything which resembles a company would be included in this definition. Whereas on the other hand, exclusive definition means exclusively only the points referred to in that definition will be covered, right? To give you an example, let's look at assessment itself, right? Assessment says that it means the procedure of determining the total income of a person. So only and only determining the total income and tax payable of a person is called an assessment. You cannot call anything else as an assessment, right? Anything else will not become an assessment. Say for example, an officer goes to somebody's house or an office to verify the documents, and during that verification he identifies something. That is not an assessment. That becomes search, seizure. Those are different topics. We'll come to that later, but that is not an assessment. Assessment is only and only if you are trying to determine the total income and the tax payable of a person for a particular year. That becomes an assessment, right? So that becomes an exclusive definition. Nothing else can be included in that, right? So that is it for this video. Let us quickly recap. What did we learn today? One is the basis of charge. 4 components of basis of charge, that is rate. Rates prescribed as per the Annual Finance Act or the Income Tax Act, or it could be both. Who? Every person, income of every person is charged to tax when on the income of the previous year, not assessment year. Remember this, only on the income of previous year tax can be charged. How? As per the provisions of the Income Tax Act. Tax can only be charged as per the provisions of the Income Tax Act. So these are the 4 pillars of the basis of charge, right? Section 4. And if this fails, the whole act fails. Next, coming to important definitions, first we learned assessee. Who is an assessee? Every person who owes any tax or any other money under this act. They could also be deemed to be an assessee or deemed to be in default in an assessee. Even if somebody has got losses or a refund or anybody else's income is chargeable to tax in their hands, then also they become an assessee. What is assessment? Then we learned what is assessment. Assessment is the procedure of determining the total income of a person and tax payable thereon. Then lastly, we learned person. Persons have got mainly 7 categories. That is an individual, a HUF, a company, a firm, AOP or BOI, local authority, and lastly, artificial judicial persons, right? So that is it for this video. This is a very important topics. Please do watch it again if you didn't understand. If you're still confused, you let me know. If there is a topic on which you want more explanation, I'll really come up with that. Do like the video if you did like. If you didn't like, do leave a comment down below on what you didn't like, and also if there is something you want me to improve. Thank you for this video. See you in the next one. Bye.